Hello everyone, it is Sunday the 5th of April 2020. I'm having a look at the global indices and really just looking at starting for the Dow. All right, so we've still got sort of slightly lower highs, lower lows there. Bearish weekly candle that didn't break the high of last week's candle. Hasn't really gone much lower, but also hasn't really done much. We kind of did a minor retracement back into the moving averages, and we look as though we're very much prepared to head lower. So I'll be looking for a break of the lows and 20,000 as well to see the market starting to head lower. Looking for another leg down, the S&P as well, putting just back into the moving averages and effectively consolidating. So did we break the high? No, we just broke the high there, but also finished bearishly. So didn't really finish much stronger. We're still sitting at the low. So basically the market at this point in time is just treading water, but not really able to recover. Looking at the Nasdaq, which did subsequently break the high, but then finished with a bit of a rejection candle there. So I did a couple of trades during the week. I also did some other videos on this during the week. I think it was Wednesday, just commenting on the fact that the market had kind of done a mixture of both things. And so right now, looking at it, it's looking certainly to me more bearish than bullish. And so what I'll be looking for this week is a break of the low of last week's candle to see if it's going to follow through from this. And look, I mean, at this point it's kind of the market has let off a lot of steam, and to see it go much lower would be kind of scary, because in terms of discounting some of the excessive growth that we've had without a breather, I think that we've already done that. But at the same time, the coronavirus stats are getting worse. It's looking, less and less likely that people will be able to get back to work, and therefore the economy will be able to kickstart. And so it's more and more likely that the markets are likely to tread water or head lower. All right, so we've got a bearish inside candle looking at the Russell 2000. Again, a break of the low that this week I'm going to be looking for bearish breakouts. And then the FTSE 100 also creating a bit of a bearish breakout pattern here to the downside. So I'll be looking for breaks of the low of last week's. These are bearish candles, looking for a break of that. The DAX as well, bearish inside candle. The French CAC is looking at that, much more of a bearish inside candle. And the stocks, Euro stocks, indecision candle, which also might as well be that, and then finishing over the ASICs. Actually more bullish of the lot. So what I had been looking for last week was to see if we created a swing low and we did a bit of a retracement back up to key levels, certainly back up to these key levels. And what actually happened in quite a few of the US markets is that they had actually done the minimum requirement for a weekly retracement. They'd hit the 382 in most cases of a fib retracement, which is sufficient in my mind. And at the same time, they were potentially setting up with bearish rejections of those levels. And so for this reason, I'm not really leaning towards them retracing much higher. Of course, I think it's possible, but the price action itself at the moment is showing them treading water, and if anything, looking bearish. Therefore, what I need to see is a break of the low to see the market commit to heading lower, and therefore I'll be looking for shorter term trading opportunities on the much lower time frames, 15 minute, 30 minute, 1 hour. And if I do take any of those trades again, I'll record those this week. That's what I'll be looking for. If we subsequently, somewhere out of nowhere, we get some bullishness and we break the high, then we do a deeper retracement, sort of 50%. I doubt we're going to get a 618 retracement. I think we've pretty much done our weekly retracement for now. So I'm sort of 60% bearish, 40% bullish. And again, if that starts to change, I'll update it during the week. But for now, certainly I think it's reasonable to expect this to break lower by seeing it head below those lows. And really, we've had the fastest kind of bear market in history so far. I find it unlikely that we are going to recover anytime soon. And actually, things might even normalize. There's just not enough even fundamentally out there in the world to indicate that things are ready to go back to normal. And so I don't really see, I see much more of uncertainty in the medium future. All right, thank you very much. Stay careful out there, and have a good week.